earnings per share were $4.04. I'm just going to read those numbers before we go to Broadcom, which is more important. Hey, Alex, what's up? We've got Costco numbers that just hit, and comp sales 5.2%, including gas FX. Estimate was for 5.7%. Their U.S. comp sales ex-gas 7.2 versus 6.3 estimates. So the ex-gas number usually more important, and that one does come in ahead of expectations. Let's come back to it. Let's talk Broadcom. Costco's not moving. I'm going to bounce just because Broadcom is going to be a lot more important. They see first quarter revenue about $14.6 billion. That's exactly where the street was. Their trailing numbers on the bottom line, $1.42 versus $1.39. Does that look like a small beat to you, Alex?
Yeah, trailing numbers are basically in line as well. Slight beat on the EPS front, Oliver. I'm glad that we have first quarter guidance here because I was reading ahead of time. Beware of kind of lumpy guidance for the year. They have three key players within their AI customer base that are kind of in flux as to when they're going to make big purchases next year. At least that's the expectation. So while the full year of 2025 is still expected to be strong, it's not necessarily going to show up in the first quarter. So it can be a head fake. And I think that we've seen a little bit of that in that initial reaction. You'll see the stock dumped on that news. But those who are kind of waiting in the wings kind of anticipated this. So I want to see a little bit more information. Expect margins to come in a little bit. It looks like EBITDA margin for first quarter, they're seeing around 66%. Semis are expected to be a bigger chunk of their business over the next short period of time as we're sort of watching that cycle bottom out. But I want to see full year guidance if they do provide it. That'll be where I'm focused. All
right, good analysis. In particular, the part about their future partners and whether or not those are the same as their current partners, aka Apple, which chips, how many, and then just the whole network of demand around hardware that Broadcom is going to be kind of battling with for the market kind of outside NVIDIA, like not the actual like big serious data center stuff, but like everything else that's going to go into the devices that are running AI. So they're going to have new RF equipment and stuff. And those relationships really, I think, are probably why this is on a little bit of the cheaper end. It's like 37 times forward earnings, but by the market's current standards of a company growing as much as Broadcom is, it's kind of a reasonable valuation, I feel, because maybe investors are worried some of those deals might fall through or something.
Yeah, I like this analysis, Oliver. I think it's just a changing of the type of company we're talking about. We're talking about a company that was perennially kind of mid-single digits in terms of revenue growth, really, really stable, really, really important to the ecosystem of companies like Apple. But now in this world of AI build-out, it's become a growth engine and a totally different type of company you have to assess in a different lens. For example, the first quarter of 2024, its revenue growth was 34%. Second quarter was 42%, and third quarter 47%, and then with the numbers that came in now around 50%. Compare that to the trailing year, you're looking at like 7%, 4%, 4%. So it's just a different type of company now, and earnings are growing at a relatively equivalent pace. They're not 50%, but 26% or greater is still really impressive, especially if we're not talking about a small company. And so with that, you actually saw this with Adobe, but in a different way. Adobe was also a very stable company that now has sort of a existential crisis that it's dealing with. What you've also seen is earnings volatility start to swell. And best way I can do this, if you were to look at the last 10 years in Broadcom, its absolute values, average price change around earnings is under 5%. Well, coming into this report, the expectation was for 7.5%. And if you just took the last two reports, the average was about 11% in terms of price reaction. So I think these companies are just changing in terms of how you have to assess them. This is like an AI growth company now, not the stable, almost consumer staple-like semiconductor name that it was before within the tech world.
Bingo, which is why I think it deserves probably a higher premium. And so here we go.
Exactly.
Yeah, this is why nice, because this is what I was saying this morning. It didn't seem like it was a very fair shake, just by the standards of the market right now, when you've got this massive inflection of growth happening for a company where there's already this big baseline of stability. It's kind of like Oracle in that way. It's like I view Broadcom as kind of being the hardware version of like Oracle. They've been around for a long time. They've got this infrastructure built on them. They had been a little bit more of a slower mover, but now it's like impossible to move slow when there's so much demand for what they're doing. So the shares rally.
If I could add though, it's good timing though, and I thought it was interesting that they sort of trickled out news in the last, I think it was 24 hours. You had first Apple and Broadcom were going to work together on an AI chip, and then like a couple hours later, it was like, oh, but they're also Apple, that is, are close to cutting Broadcom out of their iPhone and home business with their own chip. So it's good timing because Broadcom's going to need to find a new stable revenue base if Apple does truly bring a lot of that in-house. That's a really, really key relationship for Broadcom.
Very much so. Okay, so they're also raising the dividend to 59 cents. I mean, this is the type of report that certainly, I think, justifies a little bit of love. So we are getting it here. And their AI division broken out was 220% annual growth. It's just that's pretty wild. And the dividend is coming just from a pure cash flow analysis. So it's an 11% hike on their dividend, and that's good stuff.
No doubt, it shows the strength of the confidence they have, and they're doing this in the face of the uncertainty that the street maybe thinks they have around Apple. Shows that they're pretty confident that regardless of where that relationship goes, their position within the marketplace and from a capital standpoint is not only strong, it's strong enough that they can increase their dividend by 11%.
All right, good stuff. Thanks, Alex. Good analysis. Appreciate that. Broadcom definitely the highlight in the aftermarket for sure. Pretty good numbers there.